Good morning, ladies and gentlemen. It's an honor and a pleasure to have you all here with us this morning, or should I say very early morning in British Columbia, mid-afternoon in Europe, and late evening in Australia. As the pioneering and preeminent Brazilian professional masters in law, our program has committed to a global approach, devoting great focus to learning from comparative experiences on tax policy and tax administration. Within that context, we're glad to host an international dialogue on cooperative tax compliance experiences, trends, and developments, with foreign speakers and Brazilian commentators sharing insights from 8 jurisdictions across 5 continents. With the caveat that national tax systems exist in and are shaped by different legislative, cultural, administrative, and fiscal policy environments, and therefore standard approaches to cooperative compliance may be neither practical nor desirable, valuable knowledge can be obtained from discussing comparative approaches and experiences, enabling us all to learn from and reflect on their successes and missteps. A growing number of cooperative compliance models have been implemented in the past few years, acknowledging that while enforcement and punishment remain essential tools, social norms, trust building, mutual understanding, and open dialogue and interaction between taxpayers and tax authorities also matter, and matter a lot. As the OECD stated in its groundbreaking 2013 report on the topic, and I quote, "The approach is based on cooperation, but with the purposes of assuring compliance, which is to say, payment of the right amount of tax at the right time." Cooperative compliance thus helps pave the transition from a pure crime model tax compliance strategy, where the focus is on repression of illegal behavior through frequent audits and harsh penalties, to a more nuanced and comprehensive service paradigm, which, as Professor James Ohm clarifies, recognizes the role of enforcement, but also emphasizes the role of the tax administration as a facilitator and a provider of services to taxpayers. Recent cooperative compliance initiatives have shown increasing creativity and sophistication, benefiting from technology, behavioral economics insights, and nudging techniques. I would like to invite my co-host and dear colleague, Professor Leonel, to take it from here. Thank you. Professor Leonel, I think your audio is off. Yeah, you're on mute.
Oh. Good morning. It's a pleasure to have you all here. I remember that some years ago, I participated with Lynn and Lotta in a European tax project financed by Horizon 2020, that among other things treated cooperative compliance. And so I could see, as Flavio showed us, how many cooperative compliance experiences are there around the world, and get in touch with some of them. That was a very nice opportunity for me, mainly because we didn't have at that time any of those initiatives here in Brazil. In fact, the first cooperative compliance experience we had started only in 2018, the program called Nos Conformes, here in the state of São Paulo. Here, I think it's worth saying a few words about the Brazilian tax system. Here in Brazil, we have federal, state, and local taxes. And at the state level, we have a kind of a VAT, a tax that should be a VAT, but has lots of problems. And only at the federal level, we have the income tax. The program, Nos Conformes, was a program that regarded only our VAT and was created first in the state of São Paulo. But after some time, it spread out to other states, and now we have around 10 states with cooperative compliance programs here in Brazil. But what is new here now is that we have a cooperative compliance program being developed regarding federal taxes at the federal level. Last April, 1 month ago, the Federal Revenue Service enacted the norm that created the program that is called CONFIA and took the first step towards its implementation. Well, I really hope that the program, the initiative develops well, the program is a success, and I think here today, I'm sure that we will benefit from your expertise on the subject, and it will bring us experiences that will help us deal with the consolidation of these Brazilian cooperative compliance programs. So before we welcome our guest speakers and commentators, I'll have to read a brief disclaimer here. All statements expressed by Fundação Getúlio Vargas employees and guests in our online events and broadcasts exclusively represent their opinions and not necessarily FGV's institutional position. We also reiterate that everyone present here agreed to participate in this event of their own free will, and they consented to be recorded in the broadcast, which will be posted later on FGV's official channels. One more thing, the audience is welcome to share their questions using the Slido app. Please find the link in the YouTube video description of the event. Our commentators will do their best to address as many questions as possible, considering our tight schedule. So with further ado, please let us give a warm welcome to our very special guests, speakers and commentators. And first of all, I'm happy to introduce our first speaker, Professor Miranda Stewart, who will discuss the Australian experience. Professor Miranda is a professor at the University of Melbourne Law School, where she's director of the tax group, and she's a fellow at the Tax and Transfer Policy Institute at the Crawford School of Public Policy, the Australian National University. Her talk will be moderated by Giovanna Portolesi, who is a tax auditor at the Brazilian Federal Revenue Service and holds a PhD in European tax law from the University of Bologna. So please, Professor Miranda.
Thank you very much for that introduction. Can I confirm you're hearing me okay? Thank you. Well, good evening from Australia. It's around about 11 p.m. my time. Very nice to join you. I thank FGV and Flavio Rumenstein for the invitation to this very interesting comparative event. It seems so interesting that I might try to stay awake through the night and listen to the other presentations and commentators. So I have a few slides that I'm going to share, and they are also making those available to FGV. So can I confirm you can see the slide? Great. So I have 15 minutes, so I'll go fairly quickly through the presentation, but I can always come back and answer questions in response to my discussant or to the audience. So I'm going to focus mostly on large corporations after a little bit of background, but then I will say some things about the approach of the Tax Office. The Australian Tax Office is the National Revenue Authority in respect of the tax profession, advisors and accountants, and small and medium business and individuals. So first, a little bit of background. Australia has a long history of what you might call trust or cooperative compliance approaches in the tax system. It's an interesting question why we have had such a long focus on this approach. One reason is we rely very heavily on the income tax for raising revenue. I'll show very briefly how much we rely on income tax in a minute. And I guess the income tax being a very direct tax, requiring tax returns, requiring very detailed engagement with taxpayers, is lends itself to this approach, or perhaps even needs this approach. In the income tax, we moved to a self-assessment system for businesses, corporations, and also for individuals in the early 1990s, 1992. At the same time, during that period, the tax office developed, took on board a regulatory pyramid approach, which you have in this picture here. There was a lot of research done about compliance approaches. And the main goal was to have self-regulation, self-enforcement or compliance in the system as much as possible. This is the bottom of the pyramid, but backed by coercion, always supported by coercion and enforcement activity. Okay, so let me turn to particular sectors and explain a little bit some of the approaches that the tax office does today. Just some background. The corporate income tax in Australia is becoming more and more unique compared to the rest of the world, I think. We have the 30% corporate tax rate, which these days is pretty high. This chart is from the OECD average statutory corporate income tax rates around the world, excluding tax havens. And this is the trend for the last 20 years. The Australian corporate tax rate started 2000 at 30% and is still 30% for large corporations, the very large global corporations. Smaller companies have a lower rate. So we have to enforce this high rate, which you would think is very attractive for tax planning. We do have an imputation credit system for shareholders, which may encourage some companies to pay Australian tax. I won't discuss that now. We collect a lot of revenue from corporate tax. So again, there's a recent comparative OECD statistics just to show both the personal income tax. This is Australia, is the red bar, and the blue is the OECD average. We have nearly twice the OECD average in personal income tax reliance and similarly in corporate income tax reliance. But we do not have social security taxes on labor income. So these taxes are very important. And I think that they do drive this cooperative compliance approach to some extent. You can see at the other end, we are much less reliant on the VAT than many other countries. Okay, so, well, who pays this corporate tax? Well, the reality is it's the very large companies that pay most corporate tax in Australia. And so, you know, the focus of enforcement is on the very big end of town. Very large companies, that is 100 million or turnover or 250 million turnover a year, pay, you can see that they are a very small proportion of companies, 0.3%. They pay 64% of corporate tax. Very skewed, and so big focus on the large companies. The tax office measures the tax gap. They do this for multiple taxes. They've only been doing this for the last 5 years or so. So it's quite a new program. And if you're interested, I give a link to the various ways that we measure tax gap. The theoretical liability compared to actual tax revenue. So there is an interesting question, how much enforcement you really should try to achieve of a tax. You could talk about the compliance gap or the policy gap. So we're focusing on a compliance gap here. What could we collect if the effort was matching the total revenue possibilities? But it's interesting to think about the corporate tax gap at the big end of town, large corporations. The net gap is only estimated to be 3.7%. But to be precise, the tax office estimates a 7.5% gap, about $4 billion a year, before tax office engagement or enforcement. And then they estimate that they halve this gap with impact of tax office engagement. What is very interesting about the tax gap is that it's not as big as the gap for small businesses, medium businesses, and individuals. So, you know, there is a lot of public concern about large corporations don't pay their fair share of tax. But actually, when we look at the statistics and the analysis of the tax office, they actually find that many large corporations do pay significant tax. So enforcement seems to be working in a large part of the sector. One other feature that's interesting, that's worth referring for you guys, is that we have a public corporate tax reporting system. The government, the tax office, is obliged by law to report the tax paid compared to the gross income and taxable income of the top corporations. And this is reported every year. You have a link here. You can find the statistical report. Made a big media splash when this started a few years ago. These days, there is less attention paid to it because, you know, the statistics are pretty consistent. Okay, so what is the cooperative compliance approach? At the big end of town, which is where, as I said, most corporate tax is payable, basically the top 100 companies are in review, under engagement all the time, 100% of the time. It is like they are tax collectors almost. There is a constant tax presence in these companies. They are key taxpayers, so they are dealt with as clients, lots of service, lots of support and assistance, but they are also constantly under scrutiny. So it's an interesting question whether these days we would call this cooperative compliance. This is also extending to the top 1,000 companies. The main theme these days of this compliance engagement comes out of the OECD concept of justified trust. It's a pretty strict concept, but also pretty vague. The tax office says, if we told the community how we assured the tax paid by a taxpayer, would they be satisfied we did enough? It's a pretty vague question, actually. This justified trust approach is focused on the top 100 companies, now the top 1,000 and top 200 private groups, and now the next 5,000. This is mid-tier corporate groups. And you can find the reports and some examples of the approach at the link. The key focus of this program is, first of all, internal corporate tax governance, reporting to the board, reporting to shareholders and investors about tax risk, and explaining how the risk is going to be responded to. Explaining tax outcome if there are large transactions or new transactions, and explaining the difference between accounting reporting and tax results. And the big issue here, as I said, these companies are in the system all the time. There is a preventive approach, pre-tax return lodgement, constant compliance review. What is particularly interesting, this is the latest public report about the aggregate statistics here for justified trust. Green would be the really positive, the highest trust. Orange is the lowest trust. So actually is not that big a proportion of companies that get the highest trust. Most companies are medium. Hardly surprising, right? That they're in the middle. So I'm not sure how useful in the end this is as a metric. I think what the really useful compliance enforcement here is the constant engagement between tax office and these large corporations. And it's a kind of reluctant cooperation, you might say. That would be my interpretation. And it's backed by coercion. And if you talk to private sector, if you talk to tax managers in the large corporations, or you talk to the tax advisors of these corporations, what you see is actually it's not as cooperative as it looks. So in the background, we have increasing audit and investigation, very strong information gathering. A lot of audits include, for example, transfer pricing as a key issue. And we have increasing tax litigation, quite a lot of high profile cases going up the courts, looking back even 10, 15 years into the background. There is also quite strong anti-avoidance rules that have been enacted to put more pressure I guess, on these large corporations, including a penalty tax, which is payable upfront, 40% rate, unless all the information about transactions is provided. So there is a big stick in the background of cooperative compliance. Now, I'm very conscious of time, and I want to highlight just 2 or 3 other aspects of cooperative compliance in the Australian system. I just briefly mentioned that the Australian Tax Office is very cooperative with other revenue agencies around the world. Probably they don't do as much work with other agencies as they would like. They are very keen to cooperate internationally on tax administration wherever possible. So a few examples here. Okay, a couple of other areas which I think it might be interesting for the audience. In terms of tax professionals, again, the context is really important. So in Australia, very many people rely on tax advisors or tax agents to file the return. We have a self-assessment system, okay? So taxpayers are not always comfortable doing this on their own. So 70% of individuals and nearly all businesses and corporations use a tax advisor or a tax agent. So engaging with the tax profession is a very important part of the cooperative compliance approach for the tax office. So for example, there is a lot of assistance provided to tax advisors, a lot of data systems set up to support filing, respond to complaints, and so on. The tax office relies on some interesting empirical research done by academics at the ANU. Valerie Braithwaite is one. And this research suggests that tax advisors will behave aggressively in their advice or else compliantly, depending on the circumstances. They are what is called contingent. Their behavior depends on the opportunities available to them and on what their peers do, the other tax advisors. So quite a lot of the tax office effort is responding to the circumstances of tax advisors and the kind of behavior in the profession. And there is also a big stick in the background for tax advisors, as well as fraud and normal penalties. We have a promoter penalty scheme where there are penalties for the marketing of tax schemes or tax avoidance transactions. And there has been some publicity recently, very large penalties, 22 million, for example, for a recent example. So a couple more things on individuals. I won't talk about the legal framework. I guess one of the things to emphasize, though, is that the tax office tries very hard to support tax payment. They are increasingly using data and analytics instead of cooperative or as well as cooperative approaches. And the most interesting example is single touch payroll. This is real-time connection between businesses and the data for their wages and retirement payment and the tax office. They use the same software. The tax office can immediately see every fortnight the payment immediately in the system and the tax withheld. So this is only a year or two old. If you have a system like this, maybe you do not need cooperative compliance, right? We have all the data up front about tax withholding for wages. Lots of stuff about help to pay, try to be as helpful to taxpayers. One final thing, and then apologies, I'll stop. So the tax office has been very interested in behavioral economics and nudge approaches, but more for individuals and small business. We have done some trials. I give a link to the research projects we've been involved with at the tax office and the ANU. We actually find not very much evidence of behavioral response to social norms in the trials. What we find is that taxpayers respond if they get the opportunity to pay or the opportunity to get information, then they will respond. But it's not just a response to social norms. And finally, we have stuff on cash economy, but I will leave that. The big message is we're here to help. So I will stop at that point. Thank you for that.
Thank you very much, Professor Miranda Stewart. It was very enlightening, your presentation. As Flavio commented and Leonel commented before, we are implementing here in Brazil a cooperative compliance program in the federal level, at the federal level. And of course, your presentation gives us a lot of hints about the way the tax administration in Australia approaches the cooperative compliance and the relationship with their taxpayers. If I have well understood, in Australia, you have a differentiation in the approach considering the size of the taxpayers. So you consider cooperative compliance in a kind of two tranches of taxpayers, the largest companies, and then the small and medium business and individuals. I think this is something that we will have to reflect on here in Brazil when designing our program. And if you have time, I would like you to comment a bit more about this differentiation. And the justified trust is applied to the top 10, to the top 100 companies, and they are monitored all the time. And then Australia has been enlarging this kind of approach. What I get from your presentation as well is that this approach to the top 100 companies is not a voluntary. The companies are obliged. They are followed by the taxpayers without their willingness to participate in the program. I would like you to correct me if I wrongly understood. And then something that it's very important to us from your presentation is the background, the stick back to cooperative compliance that you mentioned in the slide 17. And because then we get the idea that it's not as cooperative as it seems. And I get some questions from the audience that might be interesting to address here. Did the formalization of cooperative compliance in 2017 led to any differences in practical outcomes? Or what was the impetus for formalization? Professor Wayne Q, if I pronounce correctly, asked to share with Miranda the following. One question and one comment for Miranda. Question, did the formalization of cooperative compliance, it's the same question, sorry. And the comment is, this skewedness of contribution to revenue by large corporates and the relatively low compliance gap there may be universal and seem unlikely to explain the variation across countries in the adoption of cooperative compliance. I think that it's all that we get for you now. Thank you.
Thank you very much, Giovanna and Waitrey. Now, differentiation was your first question, I think, Giovanna. I think this is really important, actually. I think it is a core element of the Australian Tax Office approach, and I think it is the right element. Right way to go is that you need to think very hard about market segmentation. Who are the taxpayers? What is their context? What is their contribution to revenue? What is their economic activity? Who are they linked to, right? What are the intermediaries, employers or banks or other large corporations or other businesses? And this is how you can start to build the compliance model for that segment. And so cooperative compliance, you might want to apply it across all sectors, but I think it will, the way that it is applied will be different in different sectors. I take Wei Chui's point that that large corporations pay most corporate tax in most countries. I think that is correct. I do think Australia is quite unusual in the very high share of corporate revenue. In fact, more similar to places like China or Brazil than, for example, to the US or Europe in relying more heavily on corporate tax at the big end of town. I think we might be a bit unusual in the kind of constant connection. It is cooperative, I would say. You would say at an individual level, the relationships are very civil and ongoing, right, between the tax managers, tax advisors of large corporations and the tax office. This is a courteous and civil relationship. But it is also always backed by coercion. This wouldn't work if you didn't have the investigative powers, the ability to audit back 10 years, the ability to litigate. So it has to be both, I think. I can't recall, did you have another question as well, Giovanna? It's very interesting to think about you initiating this program in Brazil.
Yeah, indeed it is. And well, this kind of approach of Australia is very interesting, and learning more about it will be of a great value to us.
I'm sure the tax office people would be happy. So they would give you, of course, a different story or maybe a slightly different story. And you would also get a different story from the tax managers and tax advisors. I mean, anecdotally, I hear about less cooperative arrangements, I guess, or a lot of criticism, right, of some audits and investigation. At the same time, I think large corporations know that they have to be in the system, right? They have to operate in the system. The difference is with smaller businesses, which are often more outside the system or operating against the system.
Yes, and I think that the very important thing from your presentation to us is to reflect on what are the environment that we need to have in tax administration and also in the legal framework in order to make a compliance, a cooperative compliance program more effective here. And that's why I highlighted before your slide 17, the sticks that we have, that Australia has, to make larger companies more compliant, because if they are not compliant, you are going to get the information. Maybe you have some kind of system of mandatory disclosure rules, and implementing more anti-avoidance measures are something that it's really important to if we are going to implement a voluntary program here, to have all this environment that make them more contributive, more cooperative with the tax administration. I don't know, what are your views on that?
I think you definitely need all the legal powers. This is this thing about coercion in the background, that the tax office has to be able to say, well, if you cooperate, I will not unreasonably exert my power. But then when we have increasing concern about judicial review, going to the courts to review inappropriate exercise of discretion, for example, by the commissioner. So it's quite contested as well. I suppose the other thing might be that does it make a difference? I'm coming back to Wei Chui's question. Did the formalization? So in 2017, it was justified trust. Cooperative compliance goes back further than that. It's an older idea, but the justified trust idea is 2017 from the OECD. And, you know, it's a very strange concept, really. The idea that, well, did we do enough work to make sure you pay enough tax? What would the public say? And so the tax office has the public behind them saying, you know, large corporations, it seems like they never pay enough tax. Actually, the statistics don't show that, but this is the public pressure on the revenue.
Well, I think that now I'll give the floor back to Flavio, and I think he's going to introduce the next panelist. Thank you very much, Professor Miranda, for your presentation and your comments.
No, thank you very much.
Thank you. Thank you both so much. Thank you, Miranda, for kindly staying up so late and sharing your time with us. It was a fascinating presentation with a lot of insights. And thank you, Giovanna, for the very interesting comments. Our second speaker is Professor Yariv Browner, who will discuss the US experience and add some flavor from the Israeli tax system. He is Hugh Culverhouse Eminent Scholar Chair in Taxation and Professor of Law at the University of Florida, Levin College of Law. His talk will be moderated by Patricia de la Madrid, who's a tax auditor at the Brazilian Federal Revenue Service and holds a master's degree from our very own FGV School of Law. Professor Yariv, the floor is yours. Thank you so much.
Thank you very much. And so great to see so many friends, and thank you for the invitation, FGV and Professor Rubinstein. Let me share my screen. Let's see if it works. All right. This is a kind of an interesting topic, especially because it's very much impacted by politics in the United States. And despite the significant differences between the US enforcement and compliance system and the Australian one, you will see some themes repeating themselves, I guess, in my presentation in comparison to Professor Stewart. So obviously, in the United States, because of tradition, because of history, the IRS was considered this, very feared agency, and taxes are not particularly the flavor of the day in the United States, as you may have heard. However, in reality, what happens is that over the years, especially over the last decade, the IRS started really bleeding power on one hand, and also changing its general attitude and its general vision as an agency on the other hand. And these two events collide over probably the last decade into a very, very different agency than it used to be, despite the fact that the public image and of course the politics and the history have not changed. So in this slide, you can see the quite tremendous reduction in the number of audits, real examinations of individuals in the United States. Like Australia, in the US, corporations, the large corporations, are constantly under audit. However, the people that deal with these audits are fewer and fewer. You see in this slide the decrease in the number of full-time equivalent, what we call IRS employees over the last decades. And these numbers don't even tell the whole story, because at the same time, the IRS was forced to deal with two tremendous new tasks. One of them is FATCA, and the other, even more burdensome, is the Obamacare, is the Healthcare Act. And it had to do this at a time where it was bleeding budget, in essence. Now the background is a general I guess, lack of understanding, despite a lot of research that demonstrated the great return for the country of investment in the IRS and the different articulation of IRS agents' jobs. And this has led to a nicer corporate, if you will, IRS, both by design and by necessity. So what we can see over the last decade is both the compliance, the enforcement, compliance enforcement process, and even the substantive rules are drifting toward an agency model of the IRS. So to the extent possible, the IRS is trying to push the burden on taxpayers and others. FATCA is a great example for this. In general, there are many programs that demonstrate this nicer IRS paradigm. As I said, the large corporations are under constant audit in the United States, but there are also a variety of pre-filing opportunities to engage with the IRS. Some of them would not come under the title of Cooperative Compliance, but I'm not so sure how useful this title is, and I completely agree with Professor Stewart over this issue. So some of these opportunities pre-filing are having private letter rulings like many other countries. We also have an opportunity to seek determination letters that are a little bit less than the ruling, but they solve particular specific issues. Taxpayers can enter into pre-filing agreements with the IRS. These are usually factually related agreement and also APAs, advanced pricing agreements. Both of these are extremely expensive, and therefore they are really directed towards large taxpayers. There are other programs that try to reduce the number of disputes. Notable is the industry issue resolution program. So if there's an issue that is related to a particular industry, there's a possibility to do something about it and get some IRS ruling in effect on it pre-filing. And finally, we have the official, if you will, Cooperative Compliance Program, the CAP, on which I will elaborate in a few minutes. Similarly, there are even more successful opportunities for post-filing engagement with the IRS. The obvious ones are the mutual agreement procedure if you have a treaty, and the branches of it are requests with respect to limitation of benefits provisions in treaties. We also have opportunities to do an accelerated process in certain situations. If you don't have a treaty, you also can go through several accelerated processes and to reach some closing agreements even before you get to kind of an official dispute. Probably the most successful institutions that we have to date in the United States is the appeals division within the IRS. It's an administrative division that has over time garnered the support and the trust of, generally the trust of taxpayers. And it has various paths in it, including the introduction of mediation into post-filing dispute processes before we get to court. In the United States, the large majority of disputes between the IRS and taxpayers, especially corporate taxpayer, are resolved at the level of appeals, and this is really the savior of our system. Now, when we get to actual, or official, if you will, cooperative compliance, the picture is kind of different. The CAP, this is the official name, the compliance assurance process in the United States. It started in 2005 in kind of a pilot program. It's been showing some promises, but it was very slow in the beginning, and then because of obvious political issues, it was suspended in the years 2017 to 2020, and now with the new administration, the IRS has revived the program with some relaxation measures, allowing more taxpayers to participate. One of the biggest hurdles is the requirement to have all of your information in US GAAP, and that obviously puts significant cost on certain taxpayers. So the terms are pretty simple. Taxpayer must apply to the program annually, and in particular dates. It's open for publicly traded companies with assets over $10 million. And once it's in, there's the stage of that we would think about as cooperative compliance. So the taxpayer sits with the IRS trying to resolve particular issues and providing all the information to the IRS at that stage. Once that happens, the IRS is supposed to adjust the examination level, very similar to what happened in Australia, but without the formality of the colors. Interestingly, we also have what's called the bridge phase. So these are taxpayers that the IRS decides are high risk. There's a high risk of non-compliance. They are kept within the program, but they don't get the freedom of discussing overall new issues with the IRS. Kind of a strange, I think, process. We don't have sufficient information at this point on how this is going to work. And you may see that there is very little, economic, finance, etc., accounting literature, just because we don't have the data. It's pretty new, really program. Technically, once the program is in, it is not limited. It's not a closed box. So taxpayers can still use fast track settlement procedures and also APA. There's compatibility between these, and that's a really big advantage of this program. There's certain issues that the program requires to be reported regardless of whether they think there's an issue there. And this is part of this idea, reflected probably in BEPS Section 12, that if the IRS will have all the information it wishes, somehow everything is going to work well. I know Brazil have this mandatory disclosure rules, and like Brazil, I think it doesn't really work very well in the United States. Now, to me, this entire program's future will depend on the questions of IRS budget and the future of the appeals division. So if the appeals division will continue to be cut and really decimated, as it were during the Trump administration, that will have a significant effect on this program and generally on the efficacy of compliance in the United States. I'll also mention ICAP. ICAP is the international cooperative compliance program led by the OECD. The United States is part of it, and some people said an enthusiastic participant. I would not say that, because from the objective information, what we see is that the IRS basically refers to the OECD for everything related to ICAP. So it cooperates, it provides information, it has the infrastructure for US corporation M&Es to participate in the OECD program, but without the detailed guidance, and you don't really see a push in the United States towards that. The IRS frequently mentions in this context its internal dispute resolution, APAs, etc., processes. So it's unclear in what direction this program is going to go. And clearly in the United States, the focus is completely on transfer pricing in this context. I will just probably say a couple of words about Israel. Israel is a member of the OECD. At this point in time, it is not an official participant in any of these programs, but what it did have as a source country, if you will, is a process of almost an unofficial process of cooperative compliance with the IRS on withholding taxes. This was the big ticket item in Israel, obviously for foreign corporations. However, it's not a formal process, and therefore it has some constitutional issues. I also believe that the ICAP may face constitutional issues down the road, unless, of course, what it really will mean is that those multinationals will be under the umbrella of ICAP, but truly will follow the regular domestic processes in the United States. So thank you, and I look forward to the comments.
Thank you, Professor Yarif. It was very interesting, and I had already studied a little bit about USA cooperative compliance initiatives, and I was always in doubt about that bridge phase you mentioned in CAP, and your presentation helped me clarify what that is. And I was also curious about what Israel was doing, and you brought some light to it. I took notes here, and I'd like to share with you 4 points here. About mandatory disclosure rules. Brazil tried to implement it, but it was heavily criticized and was not implemented in the end. So nowadays, Brazil doesn't have a mandatory disclosure rule in place. And on that topic, there is something I would like to reflect on with you. When I hear about these pre-filing agreements and initiatives from USA, I always think about the BEPS Action 12 and mandatory disclosure rules. So I would like to hear your thoughts on that. Do you think that the pre-filing agreements of USA are a kind of mandatory disclosure instrument? Do you see it that way also?
Yeah, obviously the reason I mentioned it is that there's this some people may say hypocrisy, some people may say a lack of clarity, because when you have many programs, but in the end of the day, what they do is provide information to the government. What you're doing is you're getting into this strange bargain, right? With the government. You're gonna give them all the information, but you don't really know what you're gonna get out of that. especially with new programs, there is you know, a lack of trust. It's like the evolution of the law in some ways. If it's going to be successful, everybody's going to be happy. I mean, successful, depending how you define successful, but it may not be, right? From the United States perspective, I think not from a taxpayer perhaps, but also from a taxpayer's perspective, the strength of the appeals division and the successful stability and certainty for the taxpayer are the most important most important assets that we have. I mean, I cannot imagine what will happen if the United States will go back to the time where every taxpayer is going to go to court. I mean, that will be really pretty bad from the United States perspective. Today, we don't really see that. We see very few court cases, and all the big court cases are not really on tremendous legal question, but usually, you know, transfer pricing kind of issues. So the mandatory disclosure rules are really tangential to all of these efforts. I don't think they've been very successful in the United States. And there is no data that supports that. I remember sitting with people from Brazil while this was discussed. That's why I mentioned the Brazilian attempt, including people from the Brazilian tax authorities. And I always thought that this is not a particularly good idea, because once you have these rules, you have to provide very clear transactions that need to be reported. But when you do that, you're always overreaching and underreaching, right? You get a skewed picture of what's happening. I think it would be much better to put the energy into other things. And the budget of all tax authorities in the world is limited. And therefore, I always thought that would be a better way. Now, what you can see is the IRS in the CAP program, like all government agencies, once they have a tool in their hands, they don't want to give it up. So they say, okay, you want to do CAP, you have to make sure that you report on all of these things that we want to know about. Can they do anything about it? Well, that we're going to see. But I don't think that this is a good, it's not an efficient way of dealing with it. Yes, the IRS has a lot of information. All tax authorities have tremendous amount of information. Are they very good in applying the law and collecting tax from that? Well, every country has a tax gap. The US has a tremendously large tax gap, has tremendous problems in terms of inequality and unbalanced, let's call it, audit history between rich and poor corporations and other entities. So I think that would be a better way of resolving problems. So the CAP seemed like a good program. The question is what they're going to do with it. And as you said, the bridge stage is kind of a weird thing for me. If you want to audit, you're already there. Remember, all of these taxpayers already have people from the IRS auditors in their offices, sitting within the offices of the taxpayer, at least for part-time. So we're not talking about anything different materially than what's already happening.
Your answer brings me to another point I had noted here about alternative means of controversy solution. Controversy solutions. You talked about the appeals, right? That's the most important way of providing tax certainty to US taxpayers, from what I understood that you said. And this is something that we don't Well, we do have some administrative procedures for discussing cases between taxpayers and the tax administration in Brazil, but most of the cases still go to court, and we are world champions of litigation, as far as I know.
That's it.
And
there's no alternative,
So I think it's very interesting for us to consider, we Brazilians, to consider the need to change our tax law to be able to have these alternative means like mediation and transactions between the tax administration and the taxpayers. Nowadays, that is questionable based on our tax law, and it's something that we should seriously consider. And one last point, if I still have time, this is not something you brought up in your presentation, but it's something that I was always curious about the US case. I have the impression that the capital markets had an important role in encouraging companies towards this tax compliance, greater tax compliance. And I would like to hear what's your thoughts on that. Do you think this makes sense?
Well, maybe I'll just say one word about because I think it's related about what you said before. I mean, the pressure has to go somewhere. In Brazil, I have a little bit of knowledge of what's happening in Brazil. Obviously, it goes to the courts. And going to the courts, to me, is really not a very good solution. It's not a very good feature of a tax system. It's wasteful and it's inefficient. Of course, it's great work for tax lawyers and especially litigation specialists, and that's great. I don't have a problem with their having great livelihood. However, for the system, for the country as a whole, that's a really bad idea. But you have to think about three levels. First of all, you have to have better laws, if you will. This is the first stage, and we've had some difficult time recently with our legislative branch. So we have a body of laws that is not necessarily congruent and presented a lot of problems. Then you have to have a tax agency that is trying to be, as efficient, as effective as possible. And I think in that sense, it's not necessarily that the appeals idea will work in every country, but in the United States, it worked. It worked very well to gain trust because they had that flexibility that, as you reported, you don't have in Brazil within the system. So just as a matter of fact, and I think it's pretty undisputed, it worked very well. And indeed, as the appeals division being decimated and have less power, what do we see? We see increase in the number of cases, tax cases in the United States. Of course, it's relatively recent, so it's difficult to draw immediate conclusions from these numbers. But to me, it seems quite obvious. The mess created by the BEPS process and the OECD in the BEPS project will obviously, and this happens throughout the world, increase the number of cases, especially transfer pricing and PE, which are the largest categories of international tax cases throughout the world. On top of it, you have this, reduction of budget and lines in the government agencies. The result is obvious. There will be an explosion of disputes, and that can't be the right answer. But we have to also remember that we need better laws. We need better thinking about the laws themselves. And maybe the last word, tax authorities. We tend to think about tax authorities, and I know you may work for one, but we think about tax authorities as these pure representative of the countries. And I think that's a mistaken view. We need to look at them also as political institutions, because they have their own livelihood, empire building, political positions, etc. And what we see, and I'll only give an example from the United States, but all of you know that in Brazil it happens as well. They take positions that are not necessarily the positions that are best for the country. Internationally, we've seen recently many tax authorities trying to use beneficial ownership, for example, which is a defunct idea just because they can, you know. And I think that's really, it's a bad sign. It's bad action that is purely political on the side of the tax authorities.
Thank you, Professor Yariv. I think I must give the word to Leonel, Professor Leonel now.
Yes, thank you very much, Professor Yariv. Thank you, Patricia. Thank you very much for your fascinating presentation. And now we're going to introduce our third speaker, Professor Lynn Oates, who will discuss the United Kingdom experience. Professor Oates is a professor of taxation and accounting and deputy director of Tax Administration Research Center at the University of Exeter Business School in the United Kingdom. Her talk will be moderated by Carlos Otávio Ferreira de Almeida, who is a professor of tax law at IBDT here in Brazil and PUC Campinas, and holds a PhD from the University of São Paulo. Professor Lynn Oates.
Hi, I'm going to commit a sin now, and I'm going to open my presentation by saying that I'm technologically incompetent, and I wasn't able to work out how to share my screen with you. So Leonel's going to share my slides with you, and I'm going to have to signal somehow when I need them to be changed, because I won't be in control. So I apologize. So never open a presentation with an apology, but hey. So thank you for allowing me to participate in this. It's great to be here. It's good to share ideas. Are my slides available, Lena?
They are not in now. Oh, sorry. Just 1 second. Oh.
Ah, it's not just me.
Are they now? Oh.
There they are. Yes. I've actually, apart from not being able to control these slides, I've also stolen them from my colleague Dennis, and I've left the front slide as it is because I wanted to remind myself to talk about Dennis. Lionel mentioned earlier on that we had met each other in a European funded project, and this is the one that Dennis and I worked on together. This was funded by the European Union, and it was a project called Fair Tax, and our particular part of that project was to look at cooperative compliance models, and we did a comparison between the Netherlands and the UK with a focus on large businesses. But I'm going to drill down today into the UK model in more detail. I know I can mention the Netherlands if it's relevant, but I'm going to focus on the UK. What we did at the time, this was back in 2016, 2017, we drilled down into the historical evolution of the models in both countries, and we also spoke to a lot of people. We spoke to practitioners, we spoke to in-house tax professionals, we spoke to tax authority people. We did about 50 interviews altogether across the two countries. So as with everything else in the tax world, of course, things have moved on since then, but I will share with you a couple of insights from those interviews. And later on, you're going to hear from Lotte Björklund Larsen, who was also a member of the Fair Tax EU project, and she looked at the Swedish model, so she'll share that with you later. Next slide, please. Thank you. I'm going to make 5 points, and bearing in mind that I'm focusing mainly on the large business sector. And my first point, and it picks up on some of the things that have been said already, is that history matters. In the UK, 2005 was quite significant because at that point they merged the two tax authorities. There was a separate Customs and Excise Tax Authority and Inland Revenue, and the two were merged together to form Her Majesty's Revenue and Customs, HMRC. And this provided a kind of window of opportunity to do some rethinking of how to organise things, and one upshot was to create at the outset a large business unit within the newly created HMRC. And it was a good opportunity to try and capture the synergies between the two former departments, although arguably there were more conflicts than synergies, but that's a different story. So that's my first point, that in order to understand how a model currently works, you have to delve a little bit into its history. And the first incarnation of the large business unit embraced a risk-based model, and I'll come back to that a bit later. And the second point I want to make is in the implementation of a program like Cooperative Compliance, reputation matters. And by that, I mean the reputation of the tax authority. The former Inland Revenue in the UK and then HMRC were recognised within the UK as being a very professional organisation, certainly at the top end of engagement with large businesses. They have a reputation of being fairly flexible and reasonably open. So there was already a history of some level of cooperation before the merger. So that in that respect, they're quite different from, say, the US, which, you know, as we've heard, the IRS has a more aggressive approach, arguably. But there was this recognition in the UK that HMRC has had good training. They had very clever people working in the large business division. Next slide, please. Thank you. So in the UK, they didn't use the term cooperative compliance for a long, long time. And it isn't really a defined program, so it's a little bit different to some of the other models that you see around the world. It's more just an agglomeration of laws, regulations, practical practices that come together. And it's only in very recent years that HMRC have started referring to it as cooperative compliance. And at the time of our interviews, there was a lot of bad publicity about multinationals not paying a fair share of tax. As you may be aware, there was a lot of parliamentary committee hearings on this. And I wanted to share with you this comment from one of our interviews. This guy, UK 17, was a former in-house tax director in a bank, a large bank, and he later moved to the Big Four. But he made the comment that this idea of cooperative compliance runs counter to the public dialogue. The man on the street doesn't want cooperative compliance. He wants corporates to be kicked. So I suspect that was part of the reticence that on the part of HMRC for using the term cooperative compliance. They didn't want to draw attention to the fact that there was these special relationships with large corporates. But in the UK, the model applies to all businesses falling within the large business directorate, which I'm not sure if that's still the case 2000, but it's in the low thousands anyway. And this is one of the big points of difference that we found between the UK and the Netherlands, because the UK model is not a voluntary program. So you don't apply to enter the program like you do in the States. It just applied to everybody. And we believe that this gave HMRC a lot more flexibility because whatever they did was going to apply to all large corporates. So they were never going to have arguments about differential treatment between different types of large businesses and so on. Next slide, please. Oh, except I've forgotten something, but don't go back. I was going to make point 3. My third point that I wanted to make relates to the previous slide. And that is that, thank you, and that is that who is in the program matters. So whether or not it's all large businesses or a selection or a self-selected group of volunteers or companies that meet a certain threshold or so on, that matters to how the program operates. Okay. This is just a selection of some of the UK's or some of the major changes that have taken place in reasonably recent years. I have to say, the UK has some big sticks, but nowhere near as many big sticks as Australia. And having once in a previous life worked at the Australian Tax Office, I can say that with some surety. But since 2009, a lot of this is precipitated by the financial crisis. So obviously the banking code came in to kick the banks around. 2009 also saw the introduction of a senior accounting officer mechanism, which makes a named individual within each multinational or large business responsible or having to attest to the efficacy of the financial statements on which the tax filings are based. 2012, we saw this new litigation and settlement strategy and a new tax assurance commissioner. And this one was introduced largely as a response to a lot of the criticism that was being levelled at HMRC in relation to so-called sweetheart deals. So these cozy deals with large companies, for example, Google. And HMRC were under a lot of stress to establish that they hadn't entered into cozy deals, and so they had to introduce some new layers of governance within HMRC to kind of demonstrate that was the case. General anti-avoidance rule, finally, after years and years and years of saying no, 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 we don't want one, they introduced one in 2013, although it is different because it is a general anti-abuse rule, so it arguably has a much higher threshold than comparable GARs in other countries. Couple of other things that happened more recently. 2016, a special measures regime was introduced for companies that were particularly naughty. So these are ones that just refused to cooperate for whatever reason. And so they introduced some quite draconian measures. And at the same time, HMRC were quite keen to say, look, this only applies to a handful of companies. It's not widespread, which of course begs the question of why you need such a regime. Why not just deal with those companies? I'm going to talk about CRMs shortly. But 2017, we saw the introduction of a requirement of making business tax strategies public. So a lot of companies were already doing that anyway, but it was so putting it into the legislation kind of just put on statutory footing something that was happening as best practice anyway. And then in 2018, we saw changes to the risk assessment approach. Next slide, please. So just a note on customer compliance management, because I find this quite fascinating. When they first introduced the large business units on the merger of the two departments in 2005, they allocated a client relationship manager to each large business. And this is a single point of contact for the company so that there can be one-on-one discussions and so on. And at that time, HMRC were using the term customer to describe taxpayers at all other levels throughout. So individuals were all called customers. But they obviously thought at the time that it was a step too far to call large businesses customers. And so the initial incarnation was client relationship managers. Eventually, they did decide to change it to customer relationship manager. And then in 2017, what was interesting was there was a cosmetic change, and they are now called customer compliance managers. And HMRC were quite open that this was not a change in the role for these people. They're still the single point of contact doing the same thing. It was really just window dressing, and it was largely in response to a lot of the publicity that was going on around these cozy deals and large corporates not paying their fair share of tax. And I think the idea of having a relationship manager for large businesses was just toxic in the public arena, and so they're now customer compliance managers doing the same job. But these particular people, CCMs, are responsible for risk assessment. So they're the ones that actually assess or dig into the company to allocate a risk rating, if you like. Next slide, please. Okay, so BRR is business risk rating. And initially, when this was first introduced, the HMRC take great pride in their risk rating model. All the criteria that they use to evaluate companies and arrive at a risk rating is all publicly available. And it's really the risk assessments at the heart of the large business cooperative compliance program. As it is in many other countries as well. And originally it had two categories. So companies were either low risk or not low risk. And there was quite a lot of discussion about whether it should be more granulated than that. And it was just agreed in the end that it was just cleaner and easier to have low risk and non-low risk. One of the problems was that for most large corporates, particularly multinationals, it was almost impossible to be low risk. Because a lot of the criteria related to how the organisation was structured. So as soon as you had unusual finance arrangements or international dealings and so on, you couldn't be low risk. And then in 2018, there was a public consultation about introducing a new model, business BRR plus the new model. And it was generally agreed that it needed to be more nuanced. And so now we have 4 categories of risk: low risk, moderate high risk, and high risk. And the rationale, like all of these models, is to try and figure out which corporates represent the greatest risk to the revenue, and therefore which ones they need to put more effort into monitoring and controlling. Thank you. So, have I missed a point? Yes, I've missed 2 points, sorry, along the way. So point 4 was that personal contact matters, and that related to the customer relationship manager. I'll come back to that point. And then the 5th point is that business risk assessment matters. So the final slide, thanks. So what's happened over time? I think HMRC has been under an enormous pressure in the UK. It's been quite a febrile environment since about 2011. It's become highly politicised. We've had all these public inquiries, as there have been in other countries, but it seems to be quite peculiar in the UK in that HMRC seem to be responding more to this public, let's call it outrage, against multinationals. And so they've progressively introduced quite a number of regulatory changes that seem to run counter to the idea of cooperation. So introducing more and more big sticks and proving how clean they are by having customer compliance managers instead of customer relations managers. And also dispute resolution has become more problematic. And again, this is a reaction to the allegations of cozy deals and sweetheart deals and so on, the customer relationship managers, there should be a quote on that slide. Is there another? Is this? No, it doesn't matter. You can't see it. I'm going to read it to you. One of our other interviewees said that HMRC are actually becoming quite paralysed, and there's situations where they're moving into litigation on things when they can't even give you a technical argument about why they don't agree with you. And one of the customer relation managers said, look, I can't be criticised for litigating. So what we've seen is in this sort of attempt to stave off criticism for being too cosy with large businesses, the customer relationship managers are having to, or CCMs are having to watch their own back, and if in doubt, don't negotiate, litigate. And that's now clogging up the system a little bit in the UK. So my 5 points, just to summarise: history matters. You've got to look at what's come before. The reputation, domestic reputation of the tax agency matters. Who's in the CC program matters. And I'll say again, I think HMRC have it fairly easy because it just applies to all large businesses. Personal contact matters. So there's CRMs. It's important to remember that these are real people, you know, two people sitting across from a desk chewing the fat on these things. And these people are not necessarily always perfectly matched. So the tax authority and the corporate large business, you know, in terms of their own personal approach to negotiation and cooperation. And then the 5th one is that risk assessment matters, that cooperative compliance can be quite costly. I remember the director of large business at HMRC saying at one stage, we're spending an awful lot of money looking after a largely compliant population. And it's important to remember that. So sometimes it's not always clear what the benefits are. Certainly very difficult to measure. But at least the risk assessment process does allow the tax authority to channel resources to those that they identify as being a greater risk to tax collection. And just to close, I want to pick up on something from Yariv said earlier. Don't underestimate the competition between tax authorities, and that they are political. They are political. It's important to remember that. I can remember the same event, the director of large business describing the UK's cooperative compliance model as the best in class. So they're all quite keen to show that what they're doing is the best way of doing things. So we always have to probe a bit more deeply. Don't ever take what they tell you is happening. No offense to the Brazilian tax authority people here, but you have to be a bit careful, just not to wholly believe what the tax authorities say about their own programs. Thank you.
Thank you, Professor Roots. Very helpful for us in Brazil. You know, at this moment in which we are discussing about cooperative compliance at a federal level here. But I would like to make some comments, especially because historically, Brazilian tax administration performance has been repressive, but nowadays we could say that step by step, tax authorities have been establishing a more collaborative approach to taxpayers. But this last point that you said, I think it's crucial, because if, for example, Her Majesty Revenues and Customs relationship with large business became highly politicized from 2011 onwards, I think that we should not neglect the threat to the cooperative compliance initiatives here in Brazil. So I would like to propose a question on this topic. How could developing countries, supposing they are interested in implementing cooperative compliance programs, how could developing countries implement cooperative compliance programs safer from an intensive political influence in its measures, for example, Professor Rhodes?
Yeah, that's a really interesting question. I don't know what safeguards. I think one of the things that makes the large business cooperative compliance programs successful where they are successful is that there's cooperation between equals. So they work well when you've got highly trained tax authority personnel who know what they're talking about, and they're able to talk on the same level as the large business representatives, and I think that's a real struggle for developing countries, because there's just not the same level of investment in training tax officials and so on. And I know in the UK and also in the Netherlands, part of the development of these programs involved really increasing the skill levels of the tax authority, the tax inspectors, to make sure that they were more commercially aware and that they understood these large businesses better, because there is always a tendency, and I say this as a former tax authority tax inspector myself, there's always this tendency to assume that everything is only ever about tax. And on the one hand, and then on the other hand, that all taxpayers are cheats. They're all trying to cheat. And when you put those two things together, it doesn't really support cooperation. And so you have to break both of those things down. Somehow you need to increase the skill levels of tax inspectors, and also break down this idea that everything's about tax, because it's not, particularly for large companies. You know, they take their decisions based on a whole range of factors, and one of which is tax. So and I don't know what the answer is for developing countries, except to continue to engage and learn from more established programs.
Okay, thanks. So in Brazil, we have a state-level program running since 2018 in the São Paulo state. It is Nos Conformes, or conforming program. We could say that in English, for example. And a crucial point that you taught us, it's about who can apply, about eligibility for the program. For example, in UK, there's no conditions for acceptance, there's no application process. And it's pretty much the same here. In São Paulo state, for example, all of taxpayers were included in the program, even without any statement of intention to cooperate or any invitation by tax authority, for example. I think this might be not advisable, because tax authorities want openness and transparency, and the other side, taxpayer wants predictability, security, and maybe without both demonstrating this commitment cooperative initiatives, risk not being more than as you said, a set of isolated measures without effectiveness. Possibly here in São Paulo, Professor Rhodes, for example, I could say the inclusion of all taxpayers results in equal treatment to small, medium, and large companies, forcing, for example, tax officials to perform low complexity and inefficient jobs. And more than this, 98% of São Paulo companies are micro and small companies that do not account for more than 20% of tax collection. In your opinion, is it a good measure, or it is in fact a point of weaknesses, for example, in this kind of selection to be included in the program?
I think it's a trade-off, you know, because you've got to be careful with these accusations of giving more favorable treatment to some sections of the taxpaying population over others. I think in the UK, it was only compulsory for large businesses. So there was still inequality between large business and it didn't apply in medium size or individuals. There's different arrangements. So that has to be balanced. Is this desire to treat taxpayers equally or give them, you know, equal levels of service, if you like. But you're right, it does have to be balanced against this. You've got to get something back. It has to be a clear understanding of what's required. And the Dutch model is quite good in that regard, because in the Netherlands, the tax authority and the taxpayer actually enter into a covenant. It's not quite a contract or formal agreement, but it's a written understanding of what each party will get. So the company will be transparent and they'll explain what they're doing and they'll provide information quickly. And then in return, the tax authority will provide certainty as quickly as possible and answer queries and provide rulings and so on. So there is this clear, we don't have that in the UK. So there isn't that sort of formal undertaking by the companies that they will play nicely with the tax authority. So that's a failing, you know, on one level. So there is this balance. I think the other advantage of having a screening program, so you're limiting who can participate in the program, does allow you to not allow the really bad taxpayers, if you like, into the program, because you know they're not going to cooperate, and so you can treat them differently in some way. So I don't think there is a one-size-fits-all model. It's just a case of looking at the different things, bearing in mind the context in which they're taking place, and just trying to figure out what's best in your own context.
Thank you very much. Our time has finished, so I return to Professor Leonel. Thank you, Professor Leonel.
Thank you very much, Professor Aline Rhodes. Thank you, Carlos Otávio, for your presentation, your comments. And now we are going to welcome our fourth speaker, Professor Lotta Björklund Larsen, who is a research fellow at the Tax Administration Research Center at the University of Exeter Business School, who will discuss the Swedish experience. Her talk will be moderated by Dr. Zabeta Göransson, who is Executive Director of the Applied Tax Studies Group. Lotta.
Thank you so much, and thank you for the invitation. This is most interesting to share my report and my research with a lot of the experiences from a lot of other countries. And also, thank you, Flavio. We met 2 years ago when I was presenting a little bit the same live at FGV. This is different times. So I'll share my screen now, and I will speak about the Swedish experience here, which is going to be slightly different than what you heard from before, because in Sweden, despite being seen as a very tax compliant country, cooperative compliance did not work at all. So I call this presentation Uncooperative Compliance. The premise is that I would suggest that we can learn as much from a failure as from a success story. So as I said, Swedes are compliant, and we also hold our tax administration in one of the highest regards of public administrations. Yet this did not help them when they rolled out the cooperative compliance project in Sweden. I did this research, as Lynn and Lionel said initially, as part of this Horizon 2020 funded European project called Fair Tax. And we collaborated a bit with Lynn and Dennis, but mostly we did a comparative project in the Nordic countries. And one of the insights that come out from this is that although you probably see the Nordic countries as very similar, the outcome of this cooperative compliance was very different. And there is, we made a report about this as well, which might be interesting to look at. But here I will speak about the Swedish experience and what instead became of trying to understand how cooperative compliance and what impact it made. It very much became a study of why did it fail, and rather aspects of what has to be considered in order to get it to work. So anyway, the project was called in 2011. The Swedish Tax Administration launched something called Fördjupad samverkan, enhanced collaboration, which fell flat, and I come back to why it did. And then they did a cosmetic change. They did not think themselves this was cosmetic, but it was perceived as one, and it was called enhanced dialogue. So from collaboration to dialogue, less collaboration, so to say. In our research, we took into account the view of all stakeholders. We spoke with the tax authority. We were actually invited by them to do this research. We spoke to M&Es, we spoke to taxpayers, and we spoke to intermediaries and also other interest organizations. And what became one very large player on the Swedish arena when it came to cooperative compliance were tax experts from the Confederation of Swedish Enterprises. I just want to underline that this is not a simple we, the revenue collectors, against them, the corporation story. These views that were for or against cooperative compliance, we found on different sides. So, and I think in the end, it becomes very much a question about trust. So what I will tease out is eventually 8 aspects to seriously consider if launching cooperative compliance projects. And these aspects, they're difficult to align or separate one from the other. Instead, they overlap and also intervene in each other. But at least I try to make a case of this sort of messy project. So what happened then? In 2011, as I said, then this, the Department of Large Corporations at the Swedish Tax Administrations, backed by the Director General of the Swedish Tax Administration, they launched this project by writing an article in the Swedish Pink business newspaper, where they said that this new way of working would be a new way to collaborate or to work with big corporations. And the issue was, in the aftermath of the financial crisis of 2007, they argued, that corporations had difficulties foreseeing tax risks, which could potentially result in drawn-out legal processes and costly tax reassessment. So instead of trying to do this a more efficient and better working procedure, they proposed this cooperative compliance. Simultaneously, they also published on their own webpage a report of how this way of working would work out. And On the same time, they also invited 100 largest Swedish corporations for information meetings, as well as advisors from the larger tax consultancies to discuss a little bit about how this was going to be worked out. And the project manager from the Swedish Tax Administration, he thought, the meetings were quite nice, but the people were quite positive about it, but they were a bit apprehensive. However, the messages in the newspaper article, the STA report, and in the information meetings were slightly different. And this became, instead of a lively debate in the Swedish Pink business paper, where people took very opposing standpoints, which is not that common in the Swedish consensus, consensus culture as we have. The Swedish Confederation of Enterprises, they also had held several workshops where they invited professors of law discussing diverse aspects, with this cooperative compliance project being very critical. Simultaneously, there were work going on behind the scenes led by the Confederation of Swedish Enterprises, and they wrote a letter which representatives of the 25 largest corporations in Sweden signed, declining not even to have to be invited to cooperative compliance. And this letter somewhat ended the public debate, and the attention in media petered out. But the confidentiality of information exchanged between the corporations and the tax administration was simultaneously also challenged in court, and it was ruled public, and I'm coming back to this. And this efficiently, or the confidentiality issue, effectively closed the lid on the cooperative compliance project. After a couple of years, a new attempt was made, and this is still the matter. This is still the biggest opposing issue with running cooperative compliance in Sweden. So there is, as far as I know, there is one participating corporation, and this corporation is publicly owned by the government. As I said, or I had a little quote there, the project manager, he said to me at one point from the Swedish Tax Administration, I could not see this resistance coming. He did not understand why all this opposition came from. So why was this cooperative compliance approach chosen? And I very much agree with Lynn when she said that history matters. So to run through a little bit about the background and what had previously been done by the Swedish Tax Administration to the corporations. In 2005, about 5 years before this, they published the Right from the Start publication, where it was argued that the Swedish Tax Administration would from now on work proactively with the aim of collecting the right, not necessarily the maximum tax, from all taxpayers. And in this way, increased trust would be created. And the strategies about the right from the start were based on international research and followed this trend of working preemptively with taxpayers to ensure that information, taxes, and fees were to the largest extent both correct reporting and paid in a timely manner. And this had been very much positively received by the public, by the corporations. It was not the maximum tax collected, it was the right tax. But also, they had also done a project that aimed to classify corporations based on risk evaluations, and several of the previous presentations we've been hearing about this, where they focused on corporations' activity in planning schemes. And such corporations participating in tax planning schemes, they should be singled out and categorized into more or less risky taxpayers. A third movement which went on and the same simultaneously in all tax administrations was this new public management, For example, like Lynn also said, you called the taxpayer a customer and you treated them like that. You were supposed to have them, thinking that you could almost have an efficient market type of dialogue or relation with taxpayers. What could come under the umbrella of new public management. And also, I think there was someone who said that this was, all of a sudden, everybody was changing or organizing conferences on cooperative compliance. The OECD was pushing this project, and it was a new trend, a new way of working with compliance. And no one could be left behind there, as it were. So we all had to be on the bandwagon. It was a good timing, the Swedish Tax Administration thought, but also a prestigious project, a beacon of modernity, if you may say so. So based on all these 4 accounts, the cooperative compliance was seen as timely. However, these 8 aspects that I teased out as this cooperative compliance project in Sweden basically fall apart while we were studying it. I would first touch about something which is very prominent in all the writings about cooperative compliance, but which was, of course, then, as everything else, more or less in the Swedish variety question, and it's the question of benefits. So it was argued that for the multinationals, they would get a more secure tax position, it would increase efficiency, there would be fewer audits and controls, it would decrease their compliance costs, and it would increase goodwill for the corporation at large in society. They would be seen as compliant, they were collaborating with the tax authority. And for the tax administration, on the other hand, cooperative compliance would reduce risk for tax errors, it would reduce handling costs for taxes and fees from corporations, and thus would increase resources for handling the really risky taxpayers, the tricky ones. And then if more taxpayers, both corporations and individuals, were seen to comply with taxation, it would increase societal tax compliance. However, it was very much questioned, would this be efficient? Would it be cost saving? And most of all, who would really do the audit controls? The corporation were very much scared or suspicious, sorry for the pronunciation, of that they would do the work that was really the work of the Swedish Tax Administration. The second issue or aspect I would like to talk about is the legal culture existing. It was questioned, well, first of all, legal issues, of course, they have precedence here. But the law is, as we know, always subject to interpretation. And one can ask why there were not a more lenient interpretation in this case. The STA had not done its homework and legal issues had not been properly investigated. And one issue after another was raised in the media debate and in this in these workshops and conferences organized by the Confederation. For example, one critique was that equality before the law. Would all taxpayers now be treated the same way? The response from the tax administration was that no, this is still, everybody will be treated the same way. This is just a modern adaptation of services. We are doing this in different ways, sort of reaching out to different types of taxpayers. Another critique was that this was the breach with the principle of legality governing administrative law in Sweden. And the response from the tax administration was that no, tax decisions would not be made in meetings. They would always be supported by the agent's legal department. And in addition, it would always be 2 contact persons. So there would be a possibility for doing sweetheart deals or revolving doors of recruiting tax administrators to go over to corporations and so forth. And on top of this, these contact persons would be changed every 4 years. And in fact, there were a lot of taxpayers I spoke to who were sort of irritated by that the contact persons would be changed every 4 years, because they said, now they know us, now they know our concerns. So it's difficult to get it right, huh? A third issue was, as proposed by the Director General at the Swedish Tax Administration, was that taxation really ought to be part of corporate social responsibility. And corporate social responsibilities had been discussed for about 10 years at the time, mostly honing in on workers' rights and also taking care of the environment, not polluting and so forth. But here he proposed that also fair taxation or being compliant should be part of corporate social responsibility. And here the Confederation of Swedish Enterprises, they were really, this backfired. It was publicly stated, public law should govern bureaucracies as well as relations between taxpayers and bureaucracies, full stop. So the legal culture didn't really allow, in the Swedish case, this big change of traditional adversary roles into a more unknown gray zone. A big issue, though, is the confidentiality, which has to do with the law, but not the tax law itself, but a law from 1766 called the Freedom of the Press Act. And this means that there is public access to official documents is the main rule, and secrecy is the exception. And one exception is that while a taxation process is underway, so from you submit your tax return until the tax administration has legally closed it, then it's secret. But once it's legally closed, then it's publicly available. This also goes for all individuals in Sweden. I mean, anyone could look up and see how much I earn, or anyone else for that matter. But this was, and initially they wanted cooperative compliance dialogue to be part of the secrecy, you know, from you submit your tax return until it's legally decided upon. But this was challenged in court, and there was someone who actually, a small entrepreneur, who said that, you know, disclosing information is this way would not be the same treatment of what is it called? Sorry, of it would be unfair competition, really. So therefore he challenged it, and he was given right in court. And this is, again, a current outstanding obstacle that lies, that works against cooperative compliance in Sweden. Because, of course, if a corporation wants to buy another, a competitor or so forth, and want to have something cleared out about taxation, which is a typical issue in these cooperative compliance works, they cannot put such a question because it is public information, obviously. Unfair competition, I sort of touched on that. And they were seen to, if you would participate in cooperative compliance, you were seen to get a VIP lane and basically get different treatment. And this treatment was argued to be very inconsistent with Swedish administrative law.
Just a second, Lotte, we have to finish. We have 1 minute.
Okay. All right. Can I have like 3 minutes?
Okay.
Okay, sorry. The societal roles were changing. This was a big change of traditional adversary roles, and it was questioned if one should be like a friend, more or less, with the tax administration. And finally, as I said, or not finally, but as I said initially, there were unclear ways of working. The Swedish tax administration was not consistent with what the purpose was, how to end such an agreement, how the information would be used, and if it would be more audits. The competence was very much questioned, and this is not just for the developing countries. This is also a case for Sweden. Is, you know, do the tax administrations have the same level of competence as the corporations have available? And then finally, there was a lot of criticism about the product launch, the management itself. So I just run through this. So there are 8 aspects to considered for a successful cooperative compliance. Bennett's fall involved, legal culture, confidentiality, unfair competition, societal roles, very clear ways of working, competences, and how you run the project. I stop there. Thank you, and sorry for going over time.
Lionel, is me now? Yes?
Yes, please, Sabita.
Okay, thank you. Thank you, everybody. Professor Lotta, your presentation was very helpful, actually. We see that when we are thinking about the corporate programs in Brazil, we have many challenges. And these 8 points that you raise up, it's something that we have to deep down in Brazil in order to build actually a good program. I think that a lot of questions that we have to answer, and this is a quite great list for us, because I think that we need to have good answers and to learn with the special cases that was not succeed. I think that's the one thing that we always have to face when we are doing something new, is try to learn good things and bad things, good process, and also that was the ones that was failure. And I think that my point here, that's to consider that I have just 1 minute, I'd want to just point out one thing. I think that all these issues, and I'm glad that all the countries has cooperative programs in different ways, is the process to discuss. I think that will be very helpful in order for us, for Brazil, to create to put together a very good program. So I think that will be, if you have a good process of discussions, all the stakeholders involved, and deep dive a little bit in all those difficult questions, we may be able to have a good cooperative program. I think that will be very important. And saying that, I say that's the new project Confia with the IRS. I think we are in a very good process. We are creating, Patricia is leading the program, so with the other folks in IRS, and then I think that the process of the discussion is very good. And when we think about Brazil, we have two, I think it's important to mention, we have two big challenges here in Brazil in order to build a corporate program that helps. We have a very difficult tax systems, very conflicted, a lot of conflicted laws. We have a very difficult system, and the tax reform is a little bit uncertain yet. We have to discuss federal taxes, state taxes, municipal taxes. Everything is going to take time. So we are in the political moment that is very complicated issue also. So I think that we have to consider that the tax reform may take a while. So having said that, we need to create a program to consider that our system is very complicated. So the other thing that is something different, I think, about the other countries in Brazil, is what we mentioned here before. It's our litigation is huge. We have a lot of issues in discussion just right now in the court, very important issues. So how are we going to deal with that? How we can build a program? It's a very good one, because I think is the environmental is created, but how we can create a program with two big challenges. And we need to do that while we still have more, 10 years of litigation in order to resolve all the cases that we have. And we have more, 2, 3, 4 years to have a tax reform that can change the system. So we need the program consider all the situations. So I think that this is a little bit different than the other countries. It seems that it's very complicated from Brazil. And the other thing that I want to point out is this: we already provide a lot of information, especially big companies. Brazil has a lot of ancillary obligations, so the companies provide a lot of information also. So when you have to calculate, for example, I say I don't know how to calculate, for example, a tax gap in a company because everything is under discussion. So a lot of information is provided. So I think the challenge that we have in this program is how to put everything together and to create a program that works for Brazil. It's not that's the big challenge. Do something that helped companies and get better environmental and to reduce litigation and also provide more security for the companies and also for the tax authorities. I think that's a huge challenge. And we need to cover all your 8 questions, all your 8 issues in order to get the program and to have a successful program. The one thing that I want to point out in the end is we need to have clear the goals and the objectives that we want to provide to achieve. And why is that? We mentioned here the Nos Conformes program from São Paulo. Yes, we launched the program, but the benefits were not implemented yet. It's 3 years already, and all the taxpayers was classified. They have a risk, but what is the benefits for the taxpayers? There's one were not implemented. So I think this is the worst that can happen. So if you do work a lot, we discuss, you have presentations, you involve all the taxpayers, we need to implement the benefits. Otherwise, we are not able to get the benefits from the program. So this is just 3 points that I want to point out, considering that we have just 1 minute. But thank you a lot. It's very, very helpful, the presentation. Thank you.
Thank you. I guess we need to move on because otherwise I had some points, but maybe we can take this in a separate.
Perfect.
Thank you so much, Professor Lotto. Thank you, Zabeta. Very interesting insights. There's a lot to discuss, and unfortunately, we're short of time. So without further ado, last but certainly not least, I would like to introduce Professor Wei Tsui, who will discuss the Chinese experience with some flavor from the Canadian tax system. He's a professor of tax law at the Peter A. Allard School of Law at the University of British Columbia. His talk will be moderated by Melina Rocha, who is the course director at York University. Professor Wei Tsui, the floor is yours, please.
Thank you so much, Flavio. First, for inviting me to this event. I really enjoyed the discussion so far. I really was very glad to hear about the first 4 presentations, the 4 countries. Let me share my screen. Are you able to see what I have?
Yes, we are. Thank you.
Okay, so let me start from the beginning. Let's see, slideshow from the beginning. Okay, so I thought I would start with somewhat of a comment on the previous 4 presentations. The outline of my presentation basically has 3 parts. I'm going to briefly talk about Canada. I will indicate that there's no formal collaborative compliance program, but that's not so much of an issue. The actual practice is probably not very different from what has been described from about Australia, the UK, and even Sweden. I think it will be interesting to look at China because it is substantially different from all of the countries that have been covered so far. And actually everything is collaborative or cooperative in China. So it's a very different paradigm. In addition, China is one can say an emerging economy or a developing country. It was fairly poor until very recently. And so there's more points of comparison. And then finally, I'm hoping to draw a conceptual scheme for thinking about the future of collaborative compliance. I just finished a book about tax administration in China, covering many different aspects of tax administration and thinking about what the Chinese experience implies for the future. And I'd like to share some of that conceptual scheme. Coming to Canada first, let me make the comment about the previous talks. It seems that most cooperative compliance programs in the countries we've discussed are targeted at large taxpayers, large business taxpayers. I would say that large business taxpayers are naturally in a cooperative relationship with the government for two reasons. One is that we know that generally large business entities tend to be more compliant than small businesses and individuals. And that's reflected in the low level of tax gap that Miranda talked about an hour earlier. Second, though, is the issue is that large taxpayers generate a big share of the government's revenue. So let's think about this. If I'm a tax administrator, should I worry about a taxpayer with a 3% tax gap or a 10% tax gap? The answer, it turns out, is that I'm going to worry more about the person with the 3% tax gap, because that person is generating 80% of my tax revenue, whereas the 10% tax gap population generates only 20% of my revenue. And so it's natural for the government to focus on large taxpayers and offer some kind of cooperation. But I think what we've heard from the 4 presentations so far is that it's hard to figure out. It can be hard to figure out what is a win-win situation for both taxpayers and the government. Therefore, I think it's okay for the CRA, the Canada Revenue Agency, not to have developed a formal cooperative compliance program. So I put these things on the slides partly to highlight what we would here understand as cooperative compliance. But I think after the 4 presentations, I don't have to go through. I think we have a common understanding. But just to show you why I say that there's no formal program in Canada, in 2017, the Tax Executive Institute asked the CRA that its taxpayers are experiencing more aggressive audits. Would you be interested in implementing a cooperative compliance program, especially given that the CRA actually plays a lead role in the OECD's Fórum on Tax Administration. And so Canadian businesses pointed out that there's not a lot of pre-filing taxpayer assistance directed at large taxpayers, or at least there could be more of that. And it pointed to other countries as having formal cooperative compliance programs. And I think the TEI people are thinking of the countries some of the countries that we discussed today. And so the TEI asked the CRA to share its views regarding cooperative tax compliance and whether it has considered implementing such a program in connection with its effort to modernize and become current. Now, so the CRA responded, and it's a long-winded answer, but in the end, there's no mention of any cooperative compliance program, especially domestic programs of this variety. Now, I want to emphasize one more thing. Cooperative compliance is, as Yariv's presentation pointed out, not just about pre-filing assistance with taxpayers. It's actually also about post-filing cooperation. So Canadian businesses asked in this conference with the CRA the following. They said that the ideal audit process might be one where tax returns are picked up for audit shortly after being filed. The audit is completed within a year or two of its commencement, and any objection filed by the taxpayer in relation to any assessment should be objectively viewed by CRA appeals within 1 year. Unfortunately, the current system is far from this ideal. A number of TEI members have reported that their income tax audits often persist until shortly before the expiration of the statute of limitation period. How does this compare with the CRA's perspective on the ideal timeline? You can see these are very diplomatically framed questions. And again, the CRA did not give a very clear answer. It said that taxpayers are actually entitled to pay the least amount of tax allowable under tax rules. And the role of the CRA is to make sure that you don't pay less than what the law requires. And it sounded a little bit like the justified trust approach that Miranda talked about. So let me turn to China. So I think this is a very different paradigm and potentially says more about collaborative compliance and its future. The interesting thing about the Chinese model is that collaborative compliance is not formally offered to large taxpayers, but in effect is practiced for large and small taxpayers alike. And this is documented in my book that's will be published by Cambridge called The Administrative Foundations of the Chinese Fiscal State. So in quick summary, China has 750,000 tax administrators spread out across the country in about 30,000 grassroots tax bureaus and offices. And there's a strong tradition of taxpayer registration and assistance with return filing and payment. Taxpayer service and account management dominate audits in terms of staff resources. So all of these are actually quite unusual. And so my understanding is that the ratio of tax administrators to the population in Brazil is exceptionally small by international standards. Even though China has over 750,000 tax administrators, that's not large scaled by population. It's a smaller ratio, far smaller ratio than Canada or the UK or Sweden. It is greater than the US, but the US is an outlier in developed countries. So there's actually a lot of taxpayer service already provided. You can say that that is heavily collaborative. One feature I want to point to that's sort of a telling sign about the Chinese system is that the use of penalties is very infrequent. Recent official position is that first offense should attract no penalty. In terms of post-filing, there is a very unusual, unique practice of mandatory taxpayer self-inspections and self-audits. The idea is that post-filing, a certain segment of the taxpayer population will be told that they may need to improve their compliance. Something may have been wrong about what they have declared, but they're given an opportunity to inspect their own tax affairs first and report any additional tax liability without any penalties. So this sounds initially similar to tax amnesty programs in many countries, but it's actually routinely used in audits for business taxpayers. And now it's especially used for large taxpayers. Okay, so this is a form of post-filing interaction between taxpayers and tax administrator that has a component of negotiation and maybe dispute resolution. What I want to show you, so I had a number of figures, but because of time, I'm just going to show you a few. What I show here is our own research looking into Chinese official reports about the prevalence of what are called self-inspections. And what I show here is that across two different tax systems in China, one is the Chinese tax administration was split into two different arms, but in both of them, self-inspections actually dominated government inspections on a number of metrics. And what this shows is taxpayer coverage. So more taxpayers have been asked to engage in self-inspection than actual government inspections conducted for taxpayers. And all of these taxpayers are suspected as having potential for paying greater tax. In terms of contribution to total revenue, we see a similar picture. So self-inspections is an important source of revenue contribution, just as important as regular government audits. And then finally, what you see here is that over time, per taxpayer adjustment in government in tax inspections have been going up. First, two things to note. One is that the per taxpayer adjustment between self and government inspections are rising synchronously, so they are comparable to each other. And this large rise after 2008 is very much attributable to the focus on large taxpayers. And so self-inspections is being applied increasingly to large taxpayers. Okay, so I'm going to skip some of the additional graphs illustrating a different portion of tax administration, but has the same pattern where taxpayers are asked to engage in self-audits. But all the result here is that very little penalty is used. There's quite a amount of negotiation between taxpayers and tax administrators about what is the right amount of tax to pay. So finally, 2 slides. Why is there so much collaborative compliance in China? This is the conceptual framework I'd like to put forward. The key components of collaborative compliance, I would say, would include no or little penalties, profiling agreements, taxpayer-specific interpretations of law in the form of private letter rulings and determinations, frequent interactions with tax administrators. All of these are actually in tension with deterrence and with the rule of law. Now, when we think about the traditional paradigm of tax administration, audits aim to secure compliance through deterrence. They require self-assessment and therefore the rule of law. What's different about China is that it has engaged in tax administration by relying on ex-ante government interventions, monitoring taxpayers in person and through technology. So taxpayers are prevented from some non-compliance. They're not always deterred. The focus is not on deterrence. In fact, norms of truthful reporting on tax returns are de-emphasized, and therefore audits play a secondary role. Rule of law is less important. Negotiations play an important role in tax collection. This goes back to the point that Miranda made in her presentation. If the government has so much information about you already and provides a lot of kind of a service, that's already very collaborative. Many scholars believe that the future of taxation is about better monitoring of taxpayers. And so there's a slogan that you may have heard of, no taxation without information. And many scholars are interested in enhancing the scope of ex-ante interventions. That means making taxpayers unable, not just unwilling to cheat. If they're right, the Chinese model is actually illustrative because that's how China approaches tax administration. And I do believe that this combination of administrative tactics are actually more compliant, more compatible with the kind of cooperative feature, cooperative compliance that we've been describing, but it would apply to the entire taxpayer population and not just to large taxpayers. Thanks very much.
Melina, are you there?
Yes, I'm here. Okay, so thank you, Professor. First, I'd like to thank Leonel and Flavio for the invitation to be here, and it's a really big honor for me to discuss the Canadian experience with you, Professor. I can't comment on Chinese experience because I really don't know anything about it, and also I'm not an expert on collaborative compliance. I have to say it's not really my field. I don't have any research on this. But so everything I comment here is based on my experience with the Canadian Revenue Agency practice, especially comparing with the Brazilian tax administration. So because I worked in both countries, in Brazil and also in Canada, I can do this comparison. In this respect, I think, although Canada has not a formal collaborative compliance program, as you said in your presentation, I can see the CRA with a much more informal collaborative approach with taxpayers than the Brazilian tax authority. For example, I will give just one example of this informal practice, we can say. For example, 2 years ago, Canada legalized the use of recreational cannabis, as you know. And I think in Brazil, everybody knows, and implemented, for example, an excise duty on the sale of cannabis. And this system was implemented together with the province, and it's quite a difficult tax model because with a lot of different rates depending on the product. We have the federal duty, the provincial ones. So to implement this model, I saw CRA taking a very collaborative approach with the business in this industry. So I had the opportunity, for example, to assist some clients on this industry. And I remember they sent CRA agents in the office, in their offices for 2 days program training, and all the CRA agent was there explaining all the rules in the client's office, and to see what the business had to change in terms of reporting, paying tax, how to calculate. It was really, really amazing. Like for me as a Brazilian, I can tell you the Brazilian tax authority would never do something like that, like CRA has done in the implementation of this cannabis tax. And so I could see a real desire from CRA to inform, to educate, to have a broad dialogue with taxpayer in the implementation of these cannabis excise duties. And I heard CRA took the same kind of approach when it was implementing GST, the GST back to 90s, this kind of approach with a lot of initiatives to educate, to inform the taxpayer. I also see here in Canada, CRA is closer to taxpayer in the sense that we can give a call if you have questions, don't need necessarily to submit a formal consultation, formal demand for a ruling. And also during the audits, CRA audits, I can see this informal approach, much more informal than in Brazil. So I have this sense that CRA is much more open to informality, to be closer to the taxpayer when it comes to audit. And so also I thought about the voluntary disclosure program in Canada that works really well, in my opinion, and where taxpayer can remit tax they didn't pay in previous years voluntarily without with some penalties relieved. So I think these examples make me think that CRA has a much more, even though it's everything informal, much more collaborative approach with taxpayer. And to finish, just a quick comment I prepared here. I was thinking, Professor Cui, that something that I always question myself, is there a relation between tax gap level of various taxes, business tax, corporate income tax, VAT, and the implementation of some formal collaborative compliance programs, in the sense that higher the tax gap, most likely the government will implement formal compliance programs. I can clearly see this trend with the implementation of electronic invoices, in the sense of, for example, here in Latin America, they were pioneers with the implementation of electronic invoices. This is because we have a really high tax gap, for example. So I can see this trend between tax gap and the electronic invoice implementation. So I was wondering if we have the same relation with compliance, collaborative compliance. For example, in Canada, the last tax gap of corporate income tax was calculated between 4% and 7%, and the VAT gap was estimated to be an average of 5.6%. And this is very low tax gap if you compare, for example, with European countries, for example. So I was wondering if you have some that Canada don't have a formal compliance, cooperative compliance, because this tax gap is not so high. So we don't need actually the taxpayer already paying their taxes. I would like to see your opinion on this. It's just like a reflection, not the impression, not an empirical academic conclusion, nothing like I did in research, but I was wondering if you can say something like that.
And so thank you again. And it was a really good presentation. I learned a lot about China, experience in China. It's very, very, very interesting. Thank you. Thanks again.
I don't know if we have time for further discussion, but my reply about your question.
We do have,
okay.
You have 5 minutes to
finish. Okay, very quickly. So, but my response is probably the one, I hope is the answer that other presenters talking about other countries will also offer. I think the premise of cooperative compliance is that you offer this kind of package to highly compliant taxpayers, so large businesses. And so that is going to mean a lower tax gap. You would not waive penalties. You would not have a lot of discussions with people who are not inclined to follow the law in the first place. And so what I was saying at the beginning is that if you look at Canada, which is a relatively compliant environment, but where the government definitely depends on large businesses, there's a natural cooperative relationship between the government and these taxpayers. That's why it's actually hard to see any room for deviation from an equilibrium, formalizing some kind of collaboration even more. But what you said earlier about the Canadian experience, I would just say that that's just better taxpayer services. Actually, it doesn't mean that the CRA is less formal, less stringent in adhering to the law. They simply provide more services because as a rich country, Canada can afford to. Thank you.
Thank you, Professor.
Thank you so much, Professor Wei Tsui. It was fascinating to learn about the Chinese model and how it could lead the way into future adjustments in taxpayers' approach to taxes and tax authorities' relationships with them. So it was very interesting and informative. Thank you so much. We're looking forward to reading your book. Thank you, Melina, for the debate. If we had the time, we could stay for much longer here discussing this very interesting topic of cooperative compliance. But unfortunately, we must wrap up our debates to comply with the schedule. I would say that we certainly learned a great deal from the amazing presentations of our foreign guest speakers and also from the insights of our Brazilian commentators. In parallel with the ambitious tax reform initiatives under discussion in Brazil, we should aim to build on and expand the recent comparative compliance initiatives, which provide an invaluable opportunity to rethink and improve the way that taxpayers and tax administrations interact on the federal and subnational levels, moving away from a confrontational approach to one that's collaborative, open, and constructive. May we all live better tax days ahead. Thank you all for attending, and a special thanks to our guest speakers and commentators. Hope to see you soon in person. Stay safe and healthy. Thank you so much. Bye-bye.